Howard Marks, we love Howard Marks on the show, y'all. People, you know that. So when he comes out with his memos, we generally end up covering what he talks about because he's dropping knowledge.
One of the memos we talked about 2 years ago with Howard Marks effectively said he's a credit investor, right? And he said, yeah, look at high yield credit right now. I think it's mispriced. You can easily make 9% return with very limited risk and do that. Part of the reason I'm sitting on more cash than I typically would, because I took Howard's advice. I bought that. It paid me a 7% dividend for 2 years. And then I looked at it recently and said, this isn't the deal it used to be. So that was exactly my plan all along, but anyway, the point being, Howard can make you money time and time again.
Yes, sir. And I was texting you about this yesterday. I know you don't like it. I was looking at some corporate bonds this week, and Petroleos Mexicanos, their bond yields have spiked. It's over 9% right now. That's the kind of thing he's talking about, whether you want to buy that particular thing or not. But that's what he's talking about. He's saying that there are yields in places for companies that, like that organization specifically, founded in 1938, been around for almost 100 years, like probably not going anywhere. Generally speaking, when you have companies, Howard put out something that said something like 98% of bonds end up getting paid out. It's something like that. So you look at this, he's just like, yields are spiking to rates that are like pretty juicy right now. And if you're going to buy something that's paying 9+%, that feels great. And you have, as you discussed, uncertainty in the stock market, it's worth a gander. That's what he's saying. All right, this memo. Nobody knows, parentheses, yet again.
It's really part 3.
Yeah, part Trey, that's right. The reason it's part Trey is because he's written 2 of them before, and he acknowledges that. What he's saying, there are some, I think, juicy, quotable notables in here. I love them. The general theme, the general premise behind what he's saying is you don't know the outcome of these situations. When uncertainty's high, people that are trying to predict predictions, phooey to the predictions. When people say analyzing the future, that's just a bunch of hocktua is what he says. But acknowledge the chaos, then invest despite not knowing the outcome. I love that quote. Now, the wrong way, I think, to take that, going a little bit back to the conversation we were just having, the wrong way to take it would be, oh, okay, I don't know what it's going to do, so I'm just going to dive in, right? Like Leroy Jenkins. That is not what he's saying.
Oh, shout out to Leroy. I liked the story in this memo. There's so much to like about this memo. First, I will say, I just thought it was incredibly thoughtful and well-researched. And he straddles all sides of these issues. He really comes with an open mind and says, let's see if there's a way that we can put a positive spin on some of this tariff stuff. Unfortunately, his research proves not really. But the first time he wrote this memo, nobody knows, I think was 2009. And he was just saying, it's tough out there, guys.
Yep.
But at Oaktree, we raised an opportunity fund to take advantage of the most distressed assets at the most distressed time. So I have 2 options right now. I can not invest and say the world is going to end, or I can say things are crazy out there. This is why I raised the capital. It's scary and no fun. I'm going to deploy that capital now.
Yeah. $10 billion.
He did the right thing.